Hello, traders. FS Collector here. Today is Wednesday, and it is October 8th. So, how is everybody doing? How is everybody doing today? Hopefully, everybody's having a fairly good day. Dollar is actually kind of going as planned. The problem is, it's definitely a little bit of a choppy pattern on some of these dollar pairs. I don't really know if it's because of the U.S. government shutdown or what, but it definitely seems like a pretty strange market this last week or so. The U.S. government is still shut down as of now. They've been shut down since like last Thursday or Wednesday or something like that. So it's been about a week now. Now most U.S. news because of that is getting delayed. Anything that has numbers is pretty much not coming out. We have FOMC meeting minutes coming out this evening. That should come out. That definitely should be a news event that should come out. So we should expect to see something out of that. So obviously the meeting minutes is the notes of the last FOMC meeting. So a lot of people, interpretate these notes on whether or not they're going to potentially lower interest rates again next quarter or not. We also have unemployment claims tomorrow, but unemployment claim numbers will not be coming out, so don't expect to see unemployment claims tomorrow unless they work something out between now and then, which they probably won't. We have Powell speaking tomorrow, which that definitely could be a nice market mover. That's happening at 1:30. Does it say where he's speaking? Oh, it's a pre-recorded video at the Community Bank Conference Hall at the Federal Reserve Bank in Washington, D.C. So this is a pre-recorded video of Powell talking. So yeah, that's probably not a big deal at all, actually, now that I look at it. I didn't even notice that earlier. So honestly, that's probably not going to be that big of a deal at all because there's not going to be any Q&A or anything like that. So no unemployment claims tomorrow. We got Aussie news tomorrow evening, so that should potentially be good. We got some Canadian news on Friday. And on Friday, we also have this dollar news. Now, I'm not really sure. It says that it's coming out, so it probably will come out because they probably already know what the numbers are. So we got consumer sentiment and inflation expectations. So yeah, anyways, yeah, let's check out the charts. I always like to start off with the DXY because the DXY for me, well, I always use the US dollar index. And I always tell people that I don't really think there's a big deal whether you use the DXY or the US dollar index, but there definitely is some differences. If you look at the DXY, it definitely is a little bit different than the US dollar index that I use. I definitely recommend using the US dollar, the FXCM US dollar index, because it's equally weighted between six currency pairs: the euro, the pound, the Aussie, I think the Swiss, the CAD, and the yen. So it's equally weighted, and that's the why I always look at this one when I'm making my videos. The fact that it's equally weighted tells me that it gives me a more accurate view of what the US dollar itself is doing, not just what the euro dollar is doing. If you look at the DXY is 57% weighted to the euro dollar, and that is why I don't use the DXY, because if you put the euro dollar overlapped onto the DXY, it is literally exactly the same chart. So if we do this and we do USD EUR for the euro dollar, it is exactly the same chart. This blue line right here is the euro dollar in reverse. So it's the euro dollar upside down. The DXY and the euro dollar are exactly the same chart. So if you want to analyze the DXY, you might as well just analyze the euro dollar because that's basically what you're doing. It's exactly the same thing. It's almost no differences whatsoever between the DXY and especially if you put the DXY into the line. There we go. Now look at that. The top one right here, that's the DXY. This bottom one is the euro dollar. There's almost no difference between these two right here, which is why I really highly recommend, even though almost nobody actually uses the US dollar index. I was always taught to use the US dollar index because that gives you a much more accurate view of what the dollar is doing. And if you know what the dollar is doing, then you basically can know what all the dollar pairs themselves are doing too, except for maybe gold because gold doesn't really care about the dollar. If you've been watching my videos, ever since this thing turned up, probably right around here, several weeks ago, I've been saying that we're either in a WXYXZ pattern or we're in a flat pattern. either scenario, the flat pattern honestly is kind of somebody else's analysis in my group. But either scenario, it doesn't really matter because what's going to happen if this is a WXYXZ? It's probably going to go up to around here and then turn back down. What's going to happen if this is actually three waves of A, this is three waves of B, and now we're in a 1, 2, 3, 4, 5 of C? It's going to go up to here, then it's going to turn back down. So it's really not that important in my eyes whether it's a WXYX or a flat. I definitely think it's a WXY because this is definitely three waves. 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 That's why I think this is potentially going to be 1, 2, 3 waves up like that, and then it's going to turn down, making a WXYXZ pattern. Which, if you look at the very high time frames, makes a lot of sense because I also think that this is a WXY. I have it labeled as an ABC, but I think this is potentially ending right here. I think this is a W, and then ending right here. I think this is an X, and then I think we're in a wave Y right now. So I think this first impulsive down, probably ending right here, is the A, and then this is 1, 2, 3 up for a B. So I think the dollar is going to stay bullish probably for the rest of the year. And then I think this is going to go down to about the 61% for the wave C, probably at the beginning of next year. And that would be your three waves of Y. So my analysis on the US dollar has basically been the same for a while. If you've been watching my videos, all my analysis you see on all of my dollar pairs is literally based off this one analysis on the US dollar index. So if we go to the euro dollar, I just want to kind of go through everything real quick on the higher time frames. For me, the daily time frame is always my most important time frame, the daily and the weekly. Whatever I see on the shorter time frames doesn't really matter so much because whatever happens on the shorter time frames is just a subdivision of what you see on the higher time frames, right? I've been saying for a while now that this is most likely either a running or an expanding flat. If it's an expanding flat, then I would target the 161 or the 178% Fibonacci extension of wave A projected off the top of wave B. That would potentially put us all the way down to here, right around the 1.12 to maybe 1.15 area, or actually 1.12 to 1.115. So if it's an expanding flat, this is what I expect it to look like. If it's a running flat, I expect it to look more like this and then turn back up. But either way, it doesn't really matter that much, right? Because either way, we're looking for shorts, and I've been recommending shorts for days now, actually for weeks now. Looking at the pound dollar, exactly the same thing. A little bit of a different pattern, but basically exactly the same thing. We have three waves down for A, we got three waves up for B. I think this is a 1, 2, 3, 4, 5. Except for this one, I think is a regular flat because this wave B turned perfectly at the 90% Fibonacci retracement of the wave A, which gives me a lot of confidence that this is a regular flat and it's a 3, 3, 5 pattern, which means that I would probably be targeting the 105 to 100% Fibonacci extension of wave A, projected off the top of wave B for my target to end this wave C. Now, the pound dollar and the euro dollar are very similar to the US dollar index. I think that the Aussie dollar is definitely a little bit different, but I think the Aussie dollar is going to end up being an ABC correction. I'm not really confident it's going to go down and break structure. Maybe it'll go down and reject structure like this, or maybe it'll make a little bit of a higher low, but I think it's going to end up doing something along these lines. I think we're potentially in a wave C on the Aussie dollar too, and the reason why I think that is because of my analysis on the US dollar index. And then the Kiwi dollar, like I said, we're just looking at the daily time frame real quick. Kiwi dollar, I don't really analyze that very much because I would rather trade the Aussie dollar than the Kiwi dollar any day. But I think this is going to keep going down. I think it's going to go down to the 61 and the 78%, and then probably turn back up based on my analysis on the other pairs. US dollar CAD is a little bit different, definitely, because it hasn't broken any structure to the upside, but I still think it's a corrective pattern. Now, I think probably what's going to happen here is that this is actually a complete five waves down right here. So this is either an A or a 1, and we're likely either in a wave B or a wave 2 now, which means that it probably is going to break this wave 4 structure. It probably is going to go up and break that high right there. It's probably going to end up making a retracement to the whole move down. Someplace between 38 and 78% of this whole move down, maybe end up looking something like this before it actually goes back down again. And like I said, I think we're either in a wave B or a wave 2 on the US dollar CAD. And then the US dollar Swiss, this is another one that I think is not complete to the downside. I still think this is going to go down further to hit this 78%. I think what happened here is we have an A, B, C of A. I think we have a W, X, Y of B. And I think we're potentially going up right now for probably, um, actually, it's probably more likely a WXY, but either way, one, two, three, four, five. I have a tendency of labeling all pullbacks as an ABC, even when they are clearly a WXY. It probably is more likely a WXY, which definitely is a difference because an ABC should potentially be five waves, three waves, five waves, like that. A WXY should be one, two, three waves, one, two, three waves, one, two, three waves, like that. It's the same general shape as an ABC. It's just that it plays out in three-way patterns instead of playing out in five-way patterns like an ABC would. So I think this is potentially going to go up. It's going to take out these highs, maybe take out some of these liquidities up here, and then probably turn down to just 78% and maybe even a little bit lower. I am definitely bullish the dollar. I think the dollar is going to keep going up for now. Now, my analysis for a long time has been that this is going to go back down, and I still have my labels here for that. But looking at all the yen pairs, I'm not really convinced that analysis is correct anymore. I think what happened is we made a crescent to the five waves up. I think we already have an A, we already have a B, we already have a C, and I think this is actually going to keep going up. I think that the yen pairs potentially are going to just keep on continuing the uptrend. I was thinking that maybe this was originally was going to be like a 1-2, but if that was true, it probably shouldn't have broke this high. It should have made a lower high and it went down, made a wave 3, a wave 4, and a wave 5 like that. So, we got to be flexible with our analysis. We need to come up with an educated guess of what we think is going to happen, but then we have to allow the market to either prove us correct or prove us wrong on this. And as of right now, I don't think this can be a wave 1 and a wave 2 anymore. I think that this has to be the end of a wave C right here, and it's probably just going to keep on trending up at this point. If we look at all yen pairs, that's definitely what it makes us believe. Now, even if it really is a correction to this last move down, it would almost have to turn at a Fibonacci level. The next Fibonacci level is the 78%, which is right around the 155 area. So even if this does end up being a correction, which it still possibly could, I think it would have to do something like this before it turns back down. And it might not even do something like that. It might go up, it might bounce, it might go up, it might bounce, and then just make higher highs, higher lows. If the market continues to make higher highs, higher lows, then we need to just trade with the trend. The market and the trend is the only one that really actually knows what's going to happen. We can come up with educated guesses all we want, but no matter what, they are just educated guesses at all times. And gold, yeah, gold has been definitely the trend of the decade, to be honest with you. But everybody thinks that gold is overextended, which on the shorter time frames, I do agree that gold does look overextended. But on the monthly time frame, if we put our Fibonacci extension on the wave 1 projected out the bottom of wave 2, we're only at the 238% of wave 1 right now. I've seen wave 3s go to the 261%, which is right around 4,300, and I've seen wave 3s go to the 361%. A lot of really, really good forecasters have been saying for a long time that gold is going to break $5,000 an ounce. And notice that the 361% is right above the $5,000 an ounce mark. There's really no reason to say that gold might not end up doing this. And if it does do that, that is completely normal. That is a completely normal looking wave 1, wave 2, wave 3, wave 4, wave 5 pattern. There's nothing irregular about it. There's nothing, it's not like it's oversold, overbought or anything like that. It's a completely normal looking pattern if it decides to do that. That's why I've been so adamant about trading with the trend, because we are literally in like a third degree wave 3. We're in a wave 3 of 3 of 3 right now in the sort of time phase. On the monthly time frame, we're in a big wave 3, as you can see. Go down to the weekly time frame, we are definitely still within a wave 3 on the weekly. Go down to the daily time frame. Now we have a trend that started right here, right? We had the end of a crescent right there. Now we have a wave 1, we have a wave 2, and we're in another wave 3. So we have a wave 3 on the weekly monthly, we have a wave 3 on the daily. So that's your second degree wave 3 that we are currently in. And then you go down even more, there's no signs of this thing being over. Now, yes, this could act as resistance. This 238 could act as resistance. It could possibly pull back right there, but based on my very high time frames, there's really no reason to say that it needs to pull back right there. It definitely could keep going up. Every single day when I make a video, I've been so adamant about the trend is your friend because I've seen these type of runaway trends. I was trading during the 2008 housing crash in the markets. And this is very similar to what you're going to see if if we do have a big economical collapse, potentially next year, like a lot of people are saying that we could. These are the type of trends you're going to see. The people that are trying to sort every single little peak are just going to lose their accounts and just lose money, lose money, lose money. The people that are just trading with the trend and not worried about when the trend is over and just going long at the end of every single one, two, three pullback, which by the way, there's dozens of one, two, three way pullbacks on this move up right here. Almost every single one of these little waves right here is a one, two, three way pullback. One, two, three way pullback. One, two, three way pullback. So we definitely don't have any reason to say that the trend is over on gold. Every single day I've been making a video saying look for longs on gold. And if you've been following along, hopefully you've been getting some of these one, two, three way pullbacks. Hopefully you've been getting this one, two, three way pullback. Hopefully you get this one, two, three way pullback. On the sort of time frames, there's probably dozens of one, two, three way pullbacks on sort of time frames. Even if you are trading like the 5 minute time frame, the higher time frames trends need to be your friend. 100%. Yeah, I just quickly went through all the dollar pairs on the daily time frame, but I'll go through and look at the sort of time frames definitely. But really, I mean, if you know that the pound dollar is going down, if you're very confident the pound dollar is going down to 1.305, then what analysis is there really to do on the sort of time frames, right? Think about it. So, anyways, yeah, let me start taking some requests. We already looked at the U.S. dollar index pretty good. Let me look at the U.S. dollar yen a little closer. I'll look at silver, and then I'll look at the pound dollar on the sort of time frames. Unfortunately, there's not a whole lot to say about the U.S. dollar yen. It's almost like gold in a way. There's really nothing to do right now except for look for logs on pullbacks. Even on the 1 hour time frame, we're still in an uptrend. We don't even have a breaker structure down on the 1 hour yet. And we're right in between two Fibonacci levels. So even if it does go down, I would definitely assume that anything I see to the downside is nothing more than a pullback within an uptrend. I mean, look at some of this stuff. Come on, it's nice. One, two, three waves down to the 38%. Go long. One, two, three waves down to the 28%, 23%. Go long. And probably there was another long up here today, wasn't there? That's not really a three-way pullback. I mean, maybe it was. But you definitely could have gone long at the 78% today, 100%. And you would definitely be sitting in some pretty nice profit right now if you did go long at the 78% today. When it hit the 78%, it made an engulfing move to the upside. Would have made for a pretty nice long opportunity, 100%. So to me, on the sort of time phase, it does kind of look like an A. It does kind of look like a B. It does kind of look like it might pop down in the Asian session tonight. But I think it's kind of crazy to try to trade this to the short side, in my opinion. Yeah, maybe if you're a scalper or something, maybe you could try to get sort it. But the problem is you might look at this and say, "Oh, this looks like a wave B. This is going to go down before it goes up," and then you go short right here, and then it goes down just a little bit, and then shoots right back up. And that does two things. It causes you to lose on a short, and it normally causes you to miss out on the long opportunity that would have given you a much bigger risk to reward ratio. So you got to be careful with those kind of trend moves because it usually affects you in two ways. It usually can cause you to lose a trade, and it usually can cause you to miss the trend trade that could have given you a really big risk to reward ratio. Yeah, let's take a look at silver. I definitely haven't been following silver, but I do know that it's been going up a lot because there's a few guys in our group that have been trading it, and yeah, it's definitely going up, huh? Ooh, holy crap! It's almost at all-time highs, isn't it? Oh yeah, it's almost at all-time highs, almost $50 an ounce. I think, I mean, I don't think, I know we're in a wave three. That's just one thing I definitely 100% know is that we're in a wave three right now. Just like on gold. Whoops. Oh yeah, we got an area of resistance coming up, that's for sure. But boy, even sorting it sounds crazy to me. For a while, I was making videos for silver, but the stuff I don't actually trade myself, it's hard to keep up with on a day-to-day basis. But there is no doubt in my mind this is a wave one, wave two, and we are in a wave three. The 178% Fibonacci extension is right above $50 an ounce, a troy ounce, and it also is a liquidity grab. It also will take out the high. It will make new all-time highs. Does that mean it has to stop there? Definitely not. It definitely could go beyond that. I just showed you on gold that gold is way beyond the 161, 178, and there's no reason to say that this might not keep going. Unfortunately, on the sort of time phase, there's not a whole lot of analysis to do. I mean, the strategy is to either already be long or it's to be waiting for more longs. There's really nothing else to say about it. What is there to say? I would definitely never look at something like this and recommend a sort. No way in hell would I say, oh, this looks like it could make a good sort, because that's definitely not what I would think about something like this. Look at the three-way pullbacks too. Look at that. One, two, three waves down. This is an expanding one, two, three waves down because it's a higher high. Actually, it's a little bit of a running, but either way, one, two, three waves down, little one, two, three waves down. There's a little one, two, three waves down over here. There's probably more one, two, three waves pullbacks along the way. My next area of resistance is this 178%, which is $50.61. So my next area to keep an eye out is $50.61. Maybe it will pull back before it gets there. Maybe not. I have no idea how it's going to get there, but I think there's a very good chance that it will get there. Let's take a look at the pound dollar on a little bit of a sort of time frame. I mean, I've been telling everybody to look for sorts. So this is a extremely good example of what I'm talking about, right? Because even today in my video, I said this, and on the pound dollar, I said this on the 1 hour time frame. This really would make you think that this is an ABC correction and that this is going to keep going up. So the 1 hour time frame today would have definitely convinced me that this was going to go up and make a wave C, 100%. But if I was not really paying too much attention to the 1 hour, and I was paying a lot of attention to the daily, I would have known that the daily has not broken structure up yet, and that our Elliott wave analysis says that we're probably going down to the 1.3 area. Whatever you see on the shorter time frames is always just a subdivision of what you see on the higher time frames. Meaning that if you think this is going to continue to make lower lows, lower highs down to this, then whatever you see on the shorter time frames is just a subdivision of that. Go down to the 1 hour time frame. Talk about a retail trap today, because this totally looked like an ABC correction. It even made an impulsive move up into 61%, but then it never broke structure to the upside. It made a lower high and it kept going down. What do I think is going to happen? I think it'll probably do the same thing again tomorrow. It'll probably go up into 78%. Everybody's going to be like, oh, that's an A, that's a B. I'm going to go long right there. And then it'll probably make a lower high, and just go down again, because the daily time frame is in a downtrend. And whatever you see on the 1 hour time frame is just a subdivision of the trend that you see on the daily time frame. So just remember, those higher time frame trends are your friend. Those are going to counteract anything you see on the sort of time frames. Always, 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 always. Like I said, if you think this is going down to 1.3, why would you go down to the 1 hour time frame today and say, oh, that looks like it could be a good long right there? That's totally the backwoods retail thinking that gets everybody in trouble, including myself sometimes. Because you would try to go long there, you would probably end up losing the long trade, and you'd probably end up missing the short trade, because you were so worried about this going up to make a wave C. You had FOMO that you were going to miss out on the long, when really you should have had FOMO about missing out on the short opportunity, because that was the trend trade from the higher time frames. So definitely, those higher time frames need to be your friend at all times. Let me take a look at natural gas. That's definitely something I haven't looked at in a while. Last time I looked at it, I thought it was ending a correction on the daily. Hmm, doesn't really look that convincing anymore, does it? I was thinking, last time I looked at this, I was thinking that maybe it was going to end the correction, because it definitely does that 1, 2, 3 shape, that ABC shape. But boy, it looks like it's trying to turn back down. But I guess there's no break of structure yet, so I guess this could, either reject structure and keep going up, or it could make a higher low and keep going up. Yeah, oh yeah, that's three waves right there too. So yeah, I think I would have to continue to be bullish. I bet this is just an ABC correction within an uptrend. It's probably going to go down, take out this low, and then probably go back up again. Probably going to do a liquidity grab, kind of like what happened over here. Look at that. Pretty much the same thing. Probably going to go down, take the low, maybe make a little bounce, trap everybody that thinks it's an ABC, and then it'll go down one more time and then probably back up again. So probably almost the same thing. It'll probably go down to this low, make a bounce. Everybody will try to go long, and then they'll lose, and then it'll go down, grab liquidity, and then it'll probably go up again. So I would definitely still be bullish overall, depending on what time frame you're trading. That's a strong move down today, though, huh? Oh man, that is a very nice ABC correction right there, though. This is three ways down. This is three ways up. That's an ABC right there for sure. This is an ABC right here for sure. And this is probably going to be a five-wave impulsive move. So yeah, I mean, I think it's probably not finished going down. It's probably going to take the lows, but overall, definitely still bullish on this for now. Unless the daily time frame breaks and holds below structure with momentum, then I would definitely have to, become a little bit more on the bearish side. But yeah, definitely. Yeah, I don't know. I mean, obviously, it definitely found some resistance, didn't it? It really depends on whether it breaks this structure on the daily time frame. If it breaks that structure and holds below that structure, then it might continue to go down. If it breaks this structure but then instantly rejects the structure, then it's probably going to keep going up, like what I showed on the 1 hour time frame. It's probably an expanding ABC correction or a running ABC correction. Unfortunately, the yen pairs, there's nothing to do on the yen pairs except for either be long already or to be patiently waiting for more longs. At least until we get some evidence otherwise. My analysis on these yen pairs were that they were going to go down again, but I'm starting to think that that's not correct. The pound yen definitely does look like it could though, so doesn't it? I mean, it looks like impulsive down. It looks like one, two, three waves up. It looks like it could be bouncing from this area. It looks like it could start a brand new downtrend for an ABC of 4. This is a wave 3. This is a wave 4. Then it potentially goes up and makes a wave 5. This is the weekly time frame, by the way. So that's something that is going to obviously take a lot of time to play out. But that definitely seems like a likely scenario. But would I try to go short now? Absolutely not. What would cause me to go short? A nice double top breaker structure at a Fibonacci level, like I was saying in my video, would cause me to look for shorts. As of right now, I would definitely be assuming that anything I see to the downside is nothing more than a pullback within an uptrend. Now, if it goes down and breaks structure and then just continues to go down and break structure, then obviously it's reversing, and obviously we need to start looking for shorts. But if it starts to go down, break structure, and then pulls back and starts to become very overlapping like that, then we definitely want to continue to look for logs. Then if it goes up and bounces from this trend level, goes down and breaks this, then that is what's going to tell me that we're looking at a trend reversal. And if we're looking at a trend reversal, then it definitely would be a big move to the downside on all the yen pairs. Ooh, JPY basket is definitely getting into a zone where it could turn. This is the JPY basket, which is basically the DXY and the JPY pairs, and I mean, and it definitely is getting into the zone where it could turn. If this pulls back, it could respect to 61%. I still think it looks like an ABC correction to me. It looks like three waves down, three waves up, and then one, two, three, four, five waves down. So the yen pairs definitely could turn soon. But when I say soon, I'm talking about the weekly time frame, and that still could be several weeks away when you're talking about the weekly time frame because this could possibly pull back and then make a doji candle, make maybe two or three doji candles like what happened over here. So if you get like a doji or two or three doji candles on the weekly time frame and before it actually goes up, that you're talking about 2 3 weeks before the actual turn possibly happens. So it definitely could turn here, and it definitely may be getting close. But when I say close, it could possibly still be several weeks away. And actually, it kind of looks to me like it probably is several weeks away. Ooh, we've got the base channel though, so that's another good sign. We're right at the bottom of the base channel, so The base channel is what's supposed to tell you the difference between an ABC and a 123. If it breaks out of this base channel, then we know that the yen is just going to keep on going down, and the yen pairs are going to just keep on going up. If it respects this base channel, it starts to pull back, and especially if it does like a break, something like this or something like this, then that's what's going to turn us bullish on the yen and bearish on the yen pairs themselves. So right now, yeah, I mean, I'm definitely still bearish on the yen, bullish on the yen pairs, 100%. If anybody has any requests, definitely put them in the chats. That's kind of the point of these live streams, is to take requests from people. So if anybody has anything they would like me to look at, definitely put it in the chats. I'll definitely be willing to look at basically anything. I don't really mind looking at cryptocurrency, stocks, or indices, or anything really. A lot of that stuff I don't follow on a day-to-day basis, so it's not like I keep up with it on a day-to-day basis. I have a pretty small list of pairs that I actually follow closely, and these are the pairs I follow closely. There's about a dozen main pairs plus the JPY basket, the dollar index. But I try to keep up with this list right here, at least on the daily time frame. Oh, Bitcoin did make a new high the other day, didn't it? I haven't been following Bitcoin at all. I don't actually trade cryptocurrency. Someday I might have to trade it, especially with these new the CBDCs possibly coming out early next year, especially for Europe. And I think the UK will probably be right behind, and the US will probably be doing it also. But the CBDCs are supposed to be coming out early next year for some countries. So at some point, we're probably all going to be trading the digital euro versus the digital euro dollar, and the digital pound versus the digital dollar, and stuff like that. It's going to be the future. There's no doubt about it, for sure. Stock market just keeps on rising. Definitely no end in sight. I mean, that pretty much can't be a wave 5 anymore. I think it still looks like a wave 3, I guess. I mean, it must be a wave 3. It really can't be a wave 5 anymore. Definitely no signs of the stock market being over. I would definitely be doing nothing but looking for longs on the stock market and the Nasdaq. Ooh, oil is making a 78% fib bounce. I wonder if this is supposed to be like a more of a WXY pattern than an ABC. The move down for the A was impulsive, so that's why I called it an ABC. But I wonder if it's like a backwards, instead of being a 3-3-5 pattern. I wonder if it's a 5-3-3 pattern. 5 ways down, 3 ways up, 3 ways down, 78% fib bounce, and then reverse back up. Because I still think that oil is potentially going to go to at least $100 a barrel, maybe even higher. I still think that oil eventually is going to end up looking something like this for 5 ways up. So unfortunately, oil I think is going to get very expensive over the next couple of years. I definitely don't use smart money concept, but the thing is smart money concept is basically I definitely well, anyways, I definitely don't use smart money concept. The smart money concept is based on things that have been around for many, 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 many years, way before scammer ICT was around and invented smart money concept. So I use obviously liquidity grabs and things like that, but that's not a smart money concept. That's something that's been around since trading has been invented. So I am definitely not a smart SMC trader. Actually, I'm a little bit offended that you think that I'm a smart money concept trader, because I actually think the ICT is one of the biggest trading scammers in the whole YouTube industry. So I definitely am not an ICT fan or anything like that. But I do think that this is potentially an ABC right here on the higher time phase. I think this is an A. I think this is a B. I think it's going to go down for a C. So basically, what I do is I use Elliott wave analysis with structure analysis. I mean, it's something that's been around for 50 years. There's nothing new about it. It's kind of like ICT is kind of like if I took Elliott wave patterns and I called this 5 wave uptrend a FX pip collector pattern. you know, it doesn't make sense. That's pretty much what ICT did with all of his concepts. Ah, a couple stocks, huh? Nobody's got any real requests coming in, so I'll definitely check it out. I don't know if I have them. Probably not. IBN. Nasdaq. Oh yeah, that's the electric vehicles. And then Upstart. Definitely nothing that I've ever looked at, but I don't mind looking. Holy crap, wow, that is in one hell of a downtrend. Wow, this thing just opened up and it just went down ever since, huh? Holy crap, wow. That's kind of crazy, huh? Boy, You know, Elliott Wave was invented by Mr. Elliott trading the stock market, you know, the indices and individual stocks like you know, like US oil and well not US oil, but like US steel and stuff like that. So, you know, Elliott Wave definitely does work on the stock market for sure, but some of these boy, a little difficult. I would think that this is 5 waves down right here for possibly like an A. I wonder if this is like an A, B, C, D, E of B. And now we're potentially going down for a C, which would take all these lows. And then maybe end up going back up after that. Yeah, that's a tough one. Depending on what time frame you're trading, I mean, I would definitely be recommending shorts on pullbacks. Oh, look at that. That was a beautiful little ABC right there today, or whenever that was. Look at that. That's a beautiful pullback. That's a nice little ABC right there, too. Yeah, it's meeting minutes. So this is the notes from the last FOMC meeting. So this definitely should be released. I mean, I definitely think they are going to end up releasing this because this is something that happened before the government shutdown. So I definitely think that this news event will likely come out. It's not like they're not going to release it. Sometimes this is a nothing news event. Sometimes this does nothing, and sometimes it does move the market a lot. It really depends on what the notes are. You know, these are notes from the last meeting, and potentially these notes could be, you know, 50, 100 pages long. It could be a very, very long minutes. So normally what happens is the news comes out, and normally it takes, you know, 20 minutes or more, you know, 20 or 30 minutes before the market actually starts to do anything, if it does do anything, because, you know, it takes a while for the market to digest what the notes say, because these notes could be 50 pages or 100 pages for all we know. You know, it could be a lot of pages. Now, you could potentially take all the notes and just throw them in, you know, chat GDP and ask for a summarize the notes or something, which is probably what most people do, but it still takes a little bit of time for this news to come out and for the market to actually digest whether or not it's anything important was said in the news. You know, if they say something about whether or not they want to raise or lower interest rates, that's when potentially the market will move. But most times than not, the FOMC members are very good at not really saying a whole lot about what's going to happen. Boy, that definitely looks like a 1, 2, 3, 4, 5 right there. That's definitely an ABC right here. So yeah, I would definitely be bearish on this 100%. This is definitely a 1, 2, 3, 4, 5 also. So that's definitely a wave A. That's almost definitely a wave B, and that's almost definitely a wave C, which means I think it's going to take out this low. I think it's going to go down, take out this low way over here, probably all the way down to 1160 or 1140. Definitely would be looking for shorts. That's for sure. Wow, this is pretty similar to the to the Riviera one or whatever it is. Boy, it looks like it's going down. Hmm, that is 5 waves up right there, so maybe it's a pullback to the 5 waves. Because it is 5 waves. It's not 3 waves up, it's 5 waves up. So it definitely could be a pullback to the 5 waves. If this move up right here was 3 waves, then I would say, oh, this is going to keep on going down, but it's not. It's a 5 wave move. So normally what happens after you get a 5 wave move is that you get a 3 wave move. So actually, this is probably an ABC correction right here. So I would be watching the 61 and the 78% to see if we get a break of structure to the upside at either one of those levels. If you do get a break of structure to the upside at either one of those levels, then I would definitely potentially start looking for longs again. No, I'm not offended. It's just I definitely am not a fan of ICT. I've watched a lot of videos about how much of a scammer he is. He is the biggest scammer on YouTube, in my opinion. It's kind of terrible because so many brand new traders start off with ICT concepts, and ICT is like one of the worst scammers I think on the internet, in my opinion. So yeah, liquidity grabs, that's just something that's been around since trading that's been around for 100 years. That's not ICT stuff. That's what annoys me about ICT is because all the stuff he uses is stuff that's been around for 100 years. It's not like it's new concepts. It's been around forever. So, anyways, if this breaks structure to the upside at the 61%, then I would become bullish again because at that point it's probably an ABC correction. This is probably an ABC right here. This is probably a running ABC. And then this is 5 waves down. And then, yeah, if we break structure, it's probably going to be a complete trend reversal. Probably going to go back up. Yeah, it'd be interesting to see what FOMC does tonight. It definitely could be a mover. The dollar pairs have been kind of tricky, I think, ever since the U.S. government shutdown has happened. I kind of hope they get this kind of figured out at some point here soon. I've been kind of laying low a little bit this week on my trading because I don't really want to mess around with these choppy markets that we've been kind of getting. Today, the markets are moving pretty nicely, but boy, they have been pretty choppy overall. I wanted to see what was on Trump's schedule today, if you had anything on there that stuck out. This is Donald Trump's schedule. This is the White House schedule. This is in Eastern Standard Time. He receives an intelligence briefing at 5 o'clock, so that's already happened. And he's participating in a roundtable event at ANTIFA, whatever that is. So nothing really on here about potentially ending the stupid government shutdown that we're in. I think today or tomorrow is going to be 1 week that the government's been shut down, which is a long time. Does anybody else have any requests? Put them in the chats. I'd be more than happy to look at pretty much anything. I try to stay on for a full hour as long as people keep requesting stuff. Definitely bullish the dollar. That's for sure. Definitely bearish the dollar pairs. Definitely extremely bullish gold. We are approaching my next area of resistance, which is 4,065, but it definitely doesn't have to stop there. I mean, it definitely could keep on going. Definitely very bullish every single yen pair. There's no doubt about that. Definitely extremely bullish the stock market. There's no reason whatsoever to think the stock market is finished going up. And Bitcoin too. I mean, honestly, Bitcoin is still going up pretty strong too. Just recently, I think this week hit all-time highs again. They've got 125 or 126, something like that. 126,300. Now, if you asked me 15 years ago if Bitcoin was really going to go that high, I would have said you were full of crap. Actually, it wasn't even. It was 10 years ago. It wasn't even. It was 9 years ago. Because I remember way back here when people were talking about Bitcoin, they're like, "Oh, that's the new thing," and I was like, "You guys are so full of crap. Bitcoin's going to zero." I've never traded Bitcoin in my life. I do own a tiny amount of Bitcoin, but when I say tiny, I mean very tiny. The only reason I even own any Bitcoin is because I got it free with the purchase of some T-bills that I signed up for a brokerage account a couple years ago. So I don't own any Bitcoin. I have never traded cryptocurrency in my life. I've never even entered a trade on cryptocurrency ever. But like I said, someday we're probably all going to be trading digital currency. So someday we're probably all going to have to start trading it. It's definitely going to be the future, and it's probably not that far off either. Because, like I said, the central banks are going to come out with their digital currency most likely this coming up year. So at the beginning of this year, coming up year, they're apparently going to start that. Oh, the Swiss pairs. Is that the cat or is that the Swiss? That's kind of the cat, isn't it? Yeah, the Euro cat's turning down. I think Philip was right about that being an ending diagonal. I was looking at, excuse me, I was looking at this and we were sitting at the 61% and I was like, oh, if this goes up and breaks structure, that's the end of the correction on the pound Aussie. But did it go up and break structure? No. We could call this an ABC correction all day and we could be like, oh, this is going to potentially go up. But if until it actually goes up and breaks structure, our analysis is completely useless in a way, right? That's why I come up with an analysis, but I follow structure. I follow the market. I follow the market flow. I try not to force my analysis on the market because my analysis, the market doesn't really give a crap about my analysis. I could say this is an ABC and then it could turn out to 61%, but that doesn't make it true. What makes it true is if it goes up and breaks structure with momentum, that makes me that makes me correct that this is an ABC correction within an uptrend. This could push down to the 78%. It could even go a lot lower than that. Let me take a look at that for you. I have a pretty big list of cryptocurrencies that I have on here, just because people ask me to look at them. Let's see. I've definitely looked at that one before. Where is it? That's so loud right there. It still kind of looks like a wave B to me, but boy, it's definitely might not be a wave B. It definitely bounced from the 78% pretty hard, didn't it? To me, it kind of looks like a wave B still. It's still, I think I said this last time I looked at it too. It looks like it potentially could turn down, but the problem with that analysis is it's going against the trend because there's no break of structure down yet. It went down two structure and rejected it and then went back up. I mean, it could just keep on going up. But boy, if it does break structure down, it might go all the way back down to these lows before it actually continues up, huh? Ooh, wow, that's definitely an impulsive move right there too. So that's definitely probably either a wave A or a wave one. We're probably either in a wave B or a wave two right now. So we probably are going to get at least one more push down, aren't we? After it finishes the wave B or the wave two. Could definitely be a wave one and a wave two because this is a Fibonacci bounce on the daily time frame. So I would say this is likely an A, this is likely a B. It's probably going to go up to the 78% for a wave C. Then if it starts to turn back down, it's probably going to go down and make a C or a 3. Like I said, it definitely could be a wave 3. You know, on the daily time frame, this could be a 1, 2, 3, and it could do this. And then this would be one big giant ABC correction on the daily. The problem is that there's really no proof of that analysis being correct. I think on the short term, though, it is going to go up again, isn't it? Definitely looks like it's going to go up again on the short term. So I would be bullish for now, depending on what time frame you're trading. Definitely looks like we're going to get another move up, in my opinion. We're probably going to go up to at least a 240 area. And then if it breaks structure to the downside at that area, then you'll know it's a wave C, and you definitely want to start looking for shorts if that happens. If it doesn't break structure, it just goes up and bounces and then makes another higher low and just keeps on going, then you're definitely going to want to just keep on looking for longs, 100%. The trend is your friend. Like I said, we could come up with analysis all day long, but it doesn't mean it's correct. What we need to do is we need to come up with a really good educated guess, and then we need to allow the market to either prove us correct or prove us incorrect. And if you know what you're looking for, you can definitely tell whether you're correct or not about a pattern that you are potentially looking out for. So yeah, definitely keeping an eye out for it. Oh boy, yeah. So, anyways, like I said, I try to keep going for about an hour, but if we don't have a lot of requests coming in, usually I'll go about 45 minutes or so. I will be making my PM videos before too long, so definitely keep an eye out for that. If anybody is interested in checking out my website, it is only $30 a month. I do share all my trades with the group at the time of entry. I also have a training course that comes with it. It's 34 videos long. I need to log in to see it, but there's a trading course, 34 videos. If anybody's interested in that, you can cancel at any time, but it is only $30 a month because I'm not looking to get rich from my membership. I'm looking to get rich from my trading. So definitely check that out. We have a great community of traders. We got about 100 people in the group, and that a great community of traders, definitely. So definitely check that out if you're interested. It's an amazing deal. You can potentially could make your money in one trade on that to pay for the membership. But anyways, I try to do these live streams every Wednesday, unless I'm busy, which sometimes I am because I do live in a beautiful part of the world. So I do like to do other things besides sit at the computer. So I try to do these live streams every Wednesday. So definitely make sure you like and subscribe so you don't miss out on my daily videos and my weekly live streams. If you're interested in becoming a member and getting all my trade setups and participating in my trading course, definitely check out my website. But anyways, I hope everybody enjoys the rest of the day. And as always, thank you for watching and happy trading to everyone.